I still prefer to buy existing stores because we can buy a store, let it run as is, probably limp it along. At least it's paying for itself until all of our equipment package and all the remodel package and everything is ordered and ready to go. And we can close a store. Our typical timeline is 3 weeks from the time we say, okay, Brian, we're closing this store. And in a 3-week period, we're going to undergo a complete renovation, including all new equipment.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 425. Today, we're going to talk about investing in laundry facilities. This is a unique asset class with a huge potential for success, yet few understand how to gain entry into this type of investment. Sam Wilson has been an active investor for more than a decade in self-storage, parking, multifamily properties and apartments, single-family homes, and RV resorts. His focus now is solely in the laundry facility space. Sam is the CEO of Bricken Investment Group and the host of the daily podcast, How to Scale Commercial Real Estate. Sam, welcome to the show.
Thank you, Brian. Appreciate it. Thanks for having me on the show today.
Tell us a little bit about yourself and how you got started investing in real estate.
Grew up in the Midwest, man. Sold a business up there. I grew up in Indianapolis, Indiana. Sold a business up there when I was 30, headed south. Memphis, Tennessee is now home for me. And I started investing in real estate when we headed south. That's the very short answer to your question. And that was in 2013. I've done every iteration, I feel like, of real estate since then. Laundromats, of course, is one of the things that I'm into, and it's been a good ride here for the last 6 years. But that's where we are right now. I still own everything from RV parks to multifamily to land to parking to laundromats to, all of those things are still in the portfolio. But our main and sole focus right now is really in the laundromat space because there's just so much untapped potential there. And we've been in it for I've almost gone on 6 years now. So it's where we are today.
I want to learn more about this transition to laundromats because you were doing so many other different types of commercial real estate assets. What led you to laundromats and why is it you're all in on them at this point?
What led me to anything I do, Brian? I have no idea is the short answer to your question. All by accident, I guess I would say. I actually had a comforter that I needed to wash. This is how I got into the laundry business. And this is kind of the story of my life. It's like, I'm a bad country song where it's like, as opposed to, how you lose your truck, your car, your dog, they all show up. You play it the other way and I get them all back. That's kind of the story of my life. Those things just show up. And so laundromats are one of those things that just kind of showed up. I needed to wash a comforter and I had to get on Google and find a laundromat near me. And I went there to go wash this giant comforter. And I'm like, this place is disgusting. Like, most people think of laundromats and they're like, gosh, it's a place where you're going to get stabbed or catch a disease. And it's about true. The place I walked into, the lights were all hanging down. 90% of the equipment said out of order on it. Cockroaches, the place hadn't been cleaned in a decade. And I'm like, this is foul. And so in the real estate business, a lot of times that's where we find value, right? Is in the things that are, that's where your value add comes into play. It's a dog asset that somebody just kicked to the curb for how many ever years too long. And that's what I saw. I walked around, I'm like, man, this place needs a new owner. This place needs revitalized. It needs new equipment, new payment systems. It needs everything. And I know nothing about the laundry business. But I asked the lady at the counter, I said, hey, who owns this store? And you think they want to sell it? She's like, in their clearest, raspy voice that she possibly could. She's like, I don't know. If you want to buy it, here's his phone number. Don't tell him I gave it to you. 3 weeks later, I owned a laundromat. And that was the introduction into the laundry space. I knew nothing about the business. I've learned most of my lessons the hard way, but we really got into it. And then in 2020, so I bought that first store in September 1st of 2018. COVID hit in 2020, and our business just kept climbing up and to the right. During this period, I'm still buying all these other asset classes, still buying multifamily, still buying storage, still partnering on RV parks, still bringing capital to other deals. By the end of 2022, I'm looking around at everything we're doing and I'm like, my little corner laundromat, I only own one store at the end of 22, is just killing it, doing great. Now we've built a significant business. It's, brand new store. It's all new payment systems, all new equipment, the lighting packages, the signage, the people, it's a brand new store. And we've been, rewarded handsomely for doing that. And that's what the end of 22, I looked around, I'm like, wait, this little store over here, I don't pay a lot of attention to, cost me only a couple hours a month, and I'm getting more than a six-figure income off of that store. I'm like, well, if I own one, why don't I own 10 or 20 or 30 of these things? Like, this just makes no sense. I need to scale this business. So that's at the end of 22, made a strategic decision not to buy anything else and just go long in laundry. And so that's what we did in 23. We added 3 stores to the portfolio plus a new development project, and just keep looking for more laundromats to invest in because they're great little cash flowing, recession resistant, inflation almost proof businesses that they just do great. And once they're up and running, they're very easy to manage. So that's kind of when, where, and why, and how. I hope I answered your question in some sort of form. Is probably a really long-winded answer, so I apologize.
I love how you took action so quickly, and within 3 weeks, you owned a laundromat after asking the question, who owns this laundromat? Talk about that experience. You took over this laundromat business, and owning a laundromat where you have employees and everything, it's different from owning an apartment building or self-storage or other types of commercial real estate assets. So what was the learning curve like, and what were some of the challenges that you encountered when you first closed on that first laundromat?
One of the challenges is that I'm a ready with how's that phrase go? I'm a ready, fire, aim type of person, and that's a flaw, a character flaw I am working on removing from my life. So ran into a lot of challenges because of that kind of methodology. And we got into it. I had a budget in mind for CapEx. Lucky I had the cash in the bank to do it, but 2.5 times that budget to bring that project turned around because I had no idea what I was doing. Like, I didn't know anything about boiler systems or plumbing or HVAC systems or the types of return air or makeup air that these stores need, or on demand versus recirculating boilers, or, you just name it. Like, I had no idea what I was plumbing. We ended up on that store, we ended up cutting out the concrete. I got pictures of guys, up to their shoulders in the dirt in the middle of this store, digging up and redoing all of the legacy plumbing that was just falling apart. I had no idea. No idea what I was getting into. So those were some of the challenges that, we now avoid by when we go to buy a store, sending in people with cameras and scoping all the lines and making sure they're appropriately sized for the types of equipment we're going to install. But again, it was back in the good old days of, again, ready, fire, aim. And that those were probably the financial and time losses not losses, but things on the front end, just that learning curve that, I didn't even consult a laundromat Facebook owners group. That would have been the smartest thing. Get out and talk to other people before you just randomly decide a value on a business and pay somebody cash for it. Like, I didn't know. So yeah, those were some of the things early on. Lots and lots of mistakes. I could write a book on the mistakes I made there early on.
Take our listeners through the process. Let's give actionable ideas here. If listeners want to invest in laundromats, where do they start?
One, again, I mentioned Facebook groups. There is a wealth of knowledge out there. And the only reason I use social media is to get on my laundromat owners' Facebook groups. I'm not a big hey, look at me and my family taking a vacation. I don't do that. I kind of am opposed to social media just because it's not my personality. But I do use the laundromat Facebook owners group all the time because I'm always learning something. So you can get on there and just be a fly on the wall and see what people are talking about, see what challenges the industry is facing, figure out how people value stores. Again, if all you did, and a lot of times I just read the forum, the groups, and just kind of read what people are doing and saying, and you can learn so much from that. So that's one place I would start, is right there. The next thing I would do is probably just start taking a tour of the stores in town. Like, go walk in, go take laundry and do them and see what the experience is like. For us, I'll give you kind of our buy box, and this will help you as your listeners go out and look at stores. Like, this is what I'm looking for personally. I want to walk in, and this is a classic example. I walked into a store last week and we're talking to the seller right now about their store. But you walk in the store and it is, it requires a key for somebody to unlock the front door. Like, okay, there's sign number one that they're behind the times. 2, is that the lighting package is probably terrible. If they're still running old, fluorescent lighting, half of it doesn't work, the bulbs are burned out, the place is dirty, the floors aren't clean. That's another great sign. Like, okay, this is a good store to buy because now you can add value to that store. But the third thing I look for is how many out of order signs. How old's the equipment? If the equipment's more than 10 years old, if there's out of order signs on it, if it's not an attended store, if its access is terrible, if they're still using quarters. I mean, Brian, it's 2024. Why are we putting quarters in a machine? Like it just doesn't make sense. I mean, people pay with their phones. Oh, you can't see my phone because it's probably blurring it out digitally. But people pay with their phones all the time for everything. Like you come into our stores now and you can start your machines. I'm here actually working at one of our stores remotely today. And I'll be honest, I love doing my laundry at a laundromat. So anytime I'm going to our stores, I just load up all the family laundry and bring it and throw it in a machine when I'm here. Because I mean, you're getting killing two birds with one stone. But I start all our machines with my phone right from our app. Just like, hey, start. You can load value to it. I mean, so those are things you're looking for. Are these? So one, start with your laundromat owners groups. Two, take tours of stores in town and see the ones that are really bad versus the ones that might have already undergone this renovation process, and see what's available out there. Because those kind of older, poorly run, poorly managed stores are where your value is. So those are two things right out of the gate that I would probably recommend. And I got more steps along the way, but I'll probably stop talking.
Great information you're sharing. What about like a feasibility study? So you know what your market's going to be and whether it's actually going to be worth the investment to do the value add.
That is the third thing that I was going to get to. So I'm glad you brought that up. Start meeting with your local distributors. Those are the keys, like your car distributors, all your laundry distributors are your key to kind of the commercial laundry equipment space. And they obviously are incentivized to help you build out in new stores because they want to sell you new equipment. So get to know who your local distributors are, find out what types of equipment they sell. I'm not going to tell you what we put in because that's just what we put in. I am incredibly partial to the brand that we use, but get to know them.
What's the brand you use?
It's called Dexter. It's Dexter laundry equipment. It's the Cadillac of laundry equipment. It's the most expensive that I've found that you can buy, but the stuff is just dang near bulletproof. So we love it. And that's what we do in every store. We just gut it and put in all brand new equipment. That's kind of our model. It's not everyone's model, but it's our model. That said, your local distributor will help you with demographic studies because your laundry equipment manufacturers don't want to sell you a whole bunch of equipment that they then have to repossess in 3 years, because obviously the resale value of equipment that's been used and abused for 3 years is not that great back to the manufacturer. They don't want to reclaim their equipment. So they're going to make sure that when they sell you equipment, that it's going to be a store that works. The laundromat industry, I'll give you this quote and then come back to the demographics question, but it has a 95% industry success rate. Take that compared to restaurants. What is that? 25, maybe 20%? 1 in 5 restaurants might make it. Laundromats, 9.5 out of 10 laundromats are successful laundromats, which is a crazy stat for the industry. That said, though, you still want to have, and I've passed on stores because the demographics were wrong. So your distributors plus the manufacturers will help you compile some really intense demographic studies. They'll also help you interpret those. So, for instance, in Nashville, Tennessee, I looked at a store recently that was closed. And if you know anything about Nashville, I mean, the city's been exploding for probably the last 5 to 6 years, just incredible growth. And there's this little neighborhood laundromat. The average household income within a 1 to 3 mile radius was like $200,000. And I'm like, that's the absolute worst place for a laundromat. No one needs a laundromat. There's the reason it's closed is because the demographic, they just make too much money. People that are making $200,000 a year are not going to your neighborhood laundromat to do their clothes. It's just not the way it works. Laundromats thrive in areas where laundromats are needed. In the high rent district is not where laundromats are going to do well. So that said, ordering those demographic studies is incredibly helpful in order to decide a great place to invest in a laundromat.
Run the numbers for us. Like when you're looking at and it sounds like you're buying existing facilities, or are you building out new facilities as well?
We own 4 existing facilities. And there's two thought processes here. So both is the answer. We've closed on a parcel of land in the next city we want to move into for a new build, primarily because we couldn't find a store in that city that we wanted to. It's a smaller town. I'm going to say there's 25,000 people in that town. But We wanted to be in that city, but there wasn't anybody willing to sell with a store that we wanted to buy. So we said, hey man, I can build a ground up facility. This will be fine. So great spot to do a ground up. However, your speed to market is one of the bigger things, especially early on, that I still prefer to buy existing stores, because we can go from, we can buy a store, let it run as is, probably limp it along, at least it's paying for itself until all of our equipment package and all the remodel package and everything is ordered and ready to go. And we can close the store. Our typical timeline is 3 weeks from the time we say, okay, Brian, we're closing this store. And in a 3-week period, we're going to undergo a complete renovation, including all new equipment. And so we can go from 0 to 100% complete in 3 weeks, store back open. Now we have a brand new store back on the market. You can't do that with a new build. Like, that's a 12-month plus process, and it ties up a lot of money along the way. So I certainly prefer to buy existing stores, just because, that's where your value is. But, there's also times and places to build ground up.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Take us through the economics and some of the metrics you look at when you're buying a store. How much do you pay for the property, the business, investment up front, versus how many machines, size of the store, and the type of returns you'd expect to make?
So depending if you're buying the real estate, we'll leave the real estate and the business as kind of two separate thoughts here, because we'll both buy the real estate and we'll also take an acceptable lease. Like the store I'm sitting in right now, this is I don't want to say it too loud, but this is a 4,000 square foot store. It's a beautiful store. Like, love it. We've completely retooled this store. I've got about $800,000 or so in this store, but I've also got a lease for $3,200 a month. That's a flat lease. No CAM, no property taxes, none of that. I couldn't begin. I mean, it'd take me $1.2 million to buy this building. Like, okay, so you put 20% down on that on the low side. What is that? $240,000. Well, that's $240,000. I don't have to tie up in equity in a building for a laundromat that I own. So I'd much rather take a really acceptable lease on this space, because 3,200 times 12 is 38,400, right? So $38,400 a year in flat costs. Like, okay, great. So from a cash flow business standpoint, leasing might make sense over buying. So that said, in this store in particular, now you know what I'm paying on a lease. We've got about $800,000 in it, including capital expenditure. Of that 800, I'm about and these are rough numbers, 2 to 225 maybe in capital expense. So we came into the store, did a full gut rehab. The place looks great. And that's probably a high number. We might even be $750 all in on this store. Either way, these are approximate numbers. And then we put about $525 to $550 in equipment in this store, which is a lot. I mean, it's a lot of money to put into a 4,000 square foot store. But again, having the requisite experience and looking at this and going, okay, I know what the laundry business can do. I know kind of just historically how to turn a store around, how to remarket it, how to give the market what they want. And we've seen that happen. We've taken this store last year. And again, in the first 12 months or first 6 months of this store last year, we were waiting on equipment. The store I'm sitting in right now, and it did about $70,000 in revenue. In the second 6 months post rehab, we did another 180. So we almost, not quite, 2.5 times roughly the revenue in this store in the second half of the year post rehab, and and that exceeded pro forma for what we had projected on this store. But that's what's possible. And I expect this store to, and it takes 12 to 24 months for them to really hit their stride. But this store will do well north of $500,000 a year in revenue. Yeah, I'd say in the next 18 to 24 months. And that won't surprise me at all.
What's your expense ratio? I mean, I'd imagine you have some staffing to consider, water bills, sewer bills, that kind of thing. But what's the expense ratio look like on that?
In the beginning, our goal is for them to just pay for themselves. So, let's say last year, we'll take last year's numbers. There'll be about $60,000 in net profit of that 250. So roughly 25% return annualized. It's a little bit less than that, whatever that is, but we're within the ballpark there on that, which I still think is, that's pretty standard for a laundromat. It's about a 25 to 35% profit margin built in on an annualized basis on a laundry facility.
So I'd imagine you're getting some sort of leverage then to pay for 75% of the costs.
Oh, yeah. So that's the other cool thing about this business is that you can 100% finance your equipment through your manufacturer. And that's why they're also heavily incentivized to make sure that when they sell you equipment, that the demographics make sense. So so you can get all your equipment paid for through the manufacturer, which is good for them because then, of course, they charge you interest on a loan and then also get to mark up the equipment a little bit more because, you don't have any bargaining power when they're loaning it all to you at 100% value. But either way, it still makes sense. It still makes sense on that side of things. And then on the capital expenditure side of things, we just fund that strictly out of pocket. Yeah, I could go out and get loans for it. There's third party lenders that'll come in and help subsidize that. You can also work through the SBA, but I haven't quite yet worked up the courage to swallow that 900 pages of documentation the SBA needs to, get their loans. But, the SBA loves laundromats. They do because they're kind of a bulletproof business model. But, those are some of the options that are out there.
I interrupted you. I was asking you about expense ratio. So based on the profit and expense or the income and expenses, what does that typically look like?
From the expense ratio?
Yeah. So like if you take your gross income and then just your expenses before debt service, what does that typically look like?
I'd have no idea. Pre-debt service, like what's EBITDA on that? I don't know. I'd have to go back and look. I'm a big picture painter. I'm sorry. So I know at the end, like, okay, I know that a store, if we put in XYZ and it makes 250, I should expect to get 60 or 70 a year out of it. So I don't know what those numbers in between are.
What do you look at? Do you look at like how much should you be getting out of each machine? Is it a square income per square foot? I mean, how do you gauge what you should be getting when you're running your pro forma?
So your turns per day is kind of one of the things we look at. So we say, okay, how much equipment can we fit inside of this store? And of course, you run this through our spreadsheets, but it's like how much equipment can fit in this store? And in square footage tells you how many pieces of equipment you can put in there and also kind of what the current infrastructure is, because you don't want to get into enormous, reworking of all the plumbing, all the electrical, everything else. You kind of want to take your footprint as it is and say, okay, how much equipment can we fit in here based upon what's here without getting into major repairs? I don't want to dig up the center of a store anymore. From that, once you know what your equipment matrix could be, then you're going to look at turns per day and say, okay, how many turns per day can we possibly get out of this? That's one thing that we look at. The second thing we're going to look at is what are some ancillary services that maybe aren't being offered. Like the store I'm sitting in right now, they were doing, what was it, $200 a month in drop-off laundry, which is nothing really. I mean, we're doing like $4,000 to $7,000 a month now at this store on average, and just people bringing in their laundry and say, "Hey guys, do my laundry." So you look at it from a turns per day perspective on the self-serve side. How much can we possibly bring in on the drop-off side? And then we also do delivery laundry, which is a third source of revenue. But that also, we don't bake that in. If we get delivery laundry, it's great, but it's not really a major part of the model. Does that answer your question?
That answers quite a bit of my question. I mean, and I love what you're talking about with the ancillary income as well. What's the staffing look like to be able to offer all those services?
Right. And that's a great question. And that's part of our model that's slightly different. A lot of laundromats are unattended laundromats. You walk in the store, there's nobody there. You just kind of have to go figure it out on your own. If something doesn't work, you got to call a phone number. Hey man, my 40 quarters I put in the machine didn't work. The machine didn't start and soap went everywhere. And now what do I do? And then you wait a week to get a refund. We staff all of our stores. And that actually helps drive revenue in a meaningful way because it's not what customers expect. And two, it keeps our stores much more secure, much cleaner. And then we can offer those ancillary services so that we can have staff on hand that when somebody wants to drop off laundry, they can do that. So staffing is important. Not every store, not every owner wants to be staffed. Again, if you go to Laundromat owners groups, there's going to be people say, hey, Brian, you've got to have staff. I would be one of those people. And then there's going to be other people who are going to say, you know what? Staff is a pain in the neck. You got to deal with them. Employees cause problems, blah, 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 blah. You're going to get the range of answers on that. That's a really you pick solution. Whichever one you want to do, you can do. But for us, we really choose to staff our stores. And that's what really sets us apart as well. I think in one of our newer stores we brought online at the end of last year, in the last month, what did they tell us in our team meeting this morning? We've generated over 100 5-star reviews in the last month just on that store on Google because we're staffed, because people are there like, oh my gosh, this is so brand new. This is great. Like people are here to be helpful. I don't feel like I'm going to get robbed or stabbed. Like imagine that. So staffing is a big component and something we really firmly believe in.
What is the staff doing? It sounds like if someone's dropping off their laundry, they're going to use the machines that exist there to wash that laundry and then do like a fluff and fold kind of situation.
Yep, absolutely. Yep. So they'll wash people's laundry when they drop it off. They also take care of the store. So they keep them, they keep our store spotless. We're meticulous about clean stores. So they keep everything wiped down. They keep machines running. They notify us if there are any errors. They just take care of everything that pertains to the day-to-day operations of a store. And that is, that's again, that's part of our model, but that's what they're doing day in and day out. And a lot of those drop offs and things like that helps pay for the staff. So in the end, even if we're not making huge amounts of money on drop off laundry, at least we're paying for the staff and keeping our stores one step above the competition.
You said something about like if you go to a store and you need to unlock the door to get in, that's a sign that there's value add. I didn't quite understand what you meant by that. Could you explain?
I went to a store last week to look at it as a potential acquisition. The sign says opens at 7:30 a.m., which is abysmal. Like, why 7:30 a.m.? Like, we have people that wait in line at 5 a.m. to get into our stores because they automatically unlock at 5 a.m. And so they know that they can go and do their laundry in peace by themselves at 5 a.m. And we're the only ones in town doing it. And so this store I went to look at, 7:30 was supposed to open up, 7:45, 8 o'clock. 8:15, the attendant rolls in to unlock the front door and moseys in. And I'm like, yeah, this is miserable. For a few $1,000, I can put an automated timer that I can control from my phone, or our general managers can control from their phone anywhere in the world, that will lock and unlock these doors on a preset schedule. Like, so we don't even think about it anymore. Just the door unlocks and people know they can show up and do laundry. So, but a lot of legacy owners aren't willing to put in that technology to increase access to the stores. So that's a simple value add that drives revenue in a meaningful way. Just get a professional door company, install a new door, put mag locks with timers and, apps on your phone. And man, you just increased value to your customers incredibly by allowing them increased access to the store.
That makes a lot of sense, but then it leads to more questions, which is why 5 a.m.? I mean, it sounds like you have a hybrid of like unstaffed time and then staff time. Why not 4 a.m.? Why not be open 24 hours? What's the thought process there?
This is going to be determined for you on a market by market basis. You pick what works for you. What we have found in Memphis, Tennessee, is that I always say we get to serve all of God's children. So stupid happens, we have found, between 11 and 5 a.m., right? After 5 a.m., most of stupid is already fallen asleep and or is so intoxicated that they're not going to continue to do stupid. And so we have found that customers really want to be at the store. The people that are coming off a late night shift or something else, they're going to roll in at 5 a.m., do their laundry and head home, or they're just getting up and getting ready for the day, but they know they can get there and do it in peace. So we've had very little incidents early in the morning. So the hybrid hours are just that. We're open from 5 a.m. to 11 p.m., staffed from 8 a.m. to 11 p.m. So there's a 3-hour window every day when there's not staff on site. And that's okay. People expect that. They know it. People aren't trying to drop off laundry typically at 5 a.m. for somebody to wash, dry, and fold for them. So we've been able to increase access while also not letting stupid do as stupid does. That's Forrest Gump.
Last piece of advice for our listeners, if they're interested in what you're saying, what do you say to them? Where do they need to start?
Again, I would say, start with your Laundromat owners groups. Get on Facebook. It's the best place to go. Start there, learn. be a fly on the wall, man. There is more knowledge and more, and that's another thing that I think we found in laundromat groups as well as in the real estate sectors is that people are ready and willing to share, their life lessons and their success stories with you and what to do right and what to do wrong. So that's exactly what I'd recommend. And of course, if you want to get a hold of me, you can go to brickeninvestmentgroup.com. That's BRICKEN investmentgroup.com.
Anything else you want to plug? Your podcast? Anything else?
Check out the How to Scale Commercial Real Estate podcast. We were doing a 7-day-a-week show. We did 720 episodes straight. And then we have moved to a 3-day-a-week show in 2023. And I'm actually way scaling it down, Brian. We're doing 1 show a week now. I know it's weak sauce, but it's something where our focus is just to have to be other places right now. So still check that out. How to Scale Commercial Real Estate podcast. Really enjoy putting that out there and having great guests on the show. I'd love to have you on at some point as well. So thank you for having me on today.
One more question. What's your favorite hack or app?
I do love my Google Tasks app because I can sort everything I need to do by home, by work, by things at work or whatever it is, and I can access it from anywhere. So if it's like, oh, hey, I'm at work, I can go back to the top 5 things, or it's like, oh, hey, things I got to get done at home. Those are the top 5 things. So I use my Google Tasks app a lot.
Thanks, Sam. I've really loved talking laundromats with you. You've shared so many great words of wisdom and, actionable ideas and how to get started and how to, look at an asset like that. So thank you so much for having this conversation with us.
Thank you, Brian. I certainly appreciate it. Thanks again. Have a great rest of your day.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.